Good morning. It's Wednesday, October 16th, about 5:30 a.m. Central Time. Couldn't sleep last night. I really wanted to check out that UK CPI. Plus, I thought that precious metals would get a boost here in the overnight session, which they did. So overnight, precious metals are surging after futures rallied on Tuesday. There was a rotation trade out of energy-related futures and into small caps, bonds, and gold, which I'll outline a little bit more here in this video. So if you watched yesterday's Metals Minute, I kind of laid out the framework for that. And then I went on CNBC and I discussed that further, as well as a trade idea that an entry-level gold futures trader could implement. So looking at the overnight price action here, you do have December gold up $13, $26.92. High of the overnight session, $26.99.40. We've got that as our 4-star resistance point at 2,700. So silver futures up 30 cents, recapturing $32, $32.06 last. High of the overnight session, $32.12. Low of the overnight session, $31.60. So $31.50 being your critical level of support. What's interesting to note is that December gold trading back in that $50 band. So we bounced off that support I outlined right around that 26.20. We became into old resistance at 26.50, broke through that. That becomes new support. 2,700 becomes new resistance here for the moment. So nice to see December copper playing a little bit of catch up here. Silver started to get away with that. Remember, copper futures and silver very interconnected here at the moment. So copper futures up 1% at 438. Aluminum futures also up, and platinum futures recapturing the 1,000 handle. So a lot of good momentum here in the precious metals and the metals complex overnight. So we do have crude oil futures down just a touch, hovering right around $70. Bitcoin futures extending their gains, looking very nice on the charts here. Wouldn't chase that market though because of the interconnection to the NASDAQ and the chip stocks all under quite a bit of pressure here. So we're seeing some of the equity weakness here yesterday, a little bit of a recovery today, but that equity weakness has broadened out over into Europe. A lot of concerns about some of the high-end type of goods and services out there. So we got a lot coming out here. We're going to have more data come out tomorrow. It's going to be the ECB rate decision, U.S. retail sales, jobless claims, industrial production, also a Fed speaker. Not a lot here on the docket today. So looking at the calendar, we just have 2 Fed speakers here. Oh, actually we don't. We've got import-export prices, so nobody's watching that whatsoever. So all the fireworks on Thursday. Now, the rotation trade that I talked about here, when you get crude oil futures breaking down. Remember, energy is one of the biggest elements of inflation. You get the inflation expectations come down, you get the rotation trade. And there's an interesting dynamic between crude oil, inflation expectations, the strength of the dollar, and Fed policy. The correlation between crude oil and, again, the dollar index, about an 85% positive correlation. So you get a big drop in the crude oil prices, you'll get that drop in the dollar index, and then you'll get that boost to the gold market, because the correlation between the dollar and the gold market right now, about 54% at the moment. So remember, crude oil prices collapsed earlier in the week because you have OPEC cutting its demand forecast for 24-25, and then also Israel kind of walking back a little bit about the escalation over there and the specific targeting of oil and nuclear facilities. Now, how this benefits gold, remember, over the past few weeks, we've seen little reaction in the gold market upon the escalation because all those money managers that rode the gold train up saw an opportunity. And remember, they were actually net short on the oil market at one point. They had to cover those shorts. They rode that market long. I believe they stayed a little bit too long into it. You get that 2-day crazy break in there, and then all of a sudden that money's got to find a new home. So you see some of the inflation pressure becomes relieved, and the Fed can focus on the fragile labor market. And then what happens is that money managers will go into small caps as their first element. That's why you have the Russell 2000 up about 0.5% overnight, exceeding all the other equity markets. You got bond futures were up a handle yesterday. Now they're up about 0.25 basis point. So 2-year treasury yields coming off, 10-year treasury yields coming off as well. And then you look at where were those money managers in correlation to the gold market? Well, you look at the CFTC report, which I published on the Metals Edge. It shows you that those money managers were, they cut their net bullish bets to an 8-week low. So that rotation took place underway. So you go to the CME's Fed Watch Show, and we outline this every day. Very important element. A lot of times it can tell you what's going on in the market. And I would check it a couple times a day because it does update periodically. So 7.2% chance Fed only cuts 25 basis points, 92.8% chance. That's been the highest level I've seen in quite a while here, that they cut rates 25 basis points. So if we continue to see a breakdown in some of the inflation type data, in energies, things like that, 50 basis points might show up, but I wouldn't count on that at all. I really think 25 basis points at the November 7th meeting makes more sense, and then they have a lot more to digest. We've also got the election, things like that. So a couple things to note here. There is an LBMA conference in Miami. They expect gold futures to climb to a record high this year, which obviously we're just about right there. They're saying 29.17 by next year, and that corresponds with the terminal rate hitting that 3 to 3.25, 3.25 to 3.5%. That terminal rate means the Fed stops cutting rates there. That's where gold futures should peak. Gold futures and futures tend to front run that type of data, so expected to gold prices to peak before that, probably 30-60 days out, before the Fed makes its final interest rate, and then we should start to either consolidate, slide, increase. We don't know what's going to happen. Remember, we trade the market we're in, we trade the game they're in, not the game that we want here. So silver, they're predicting a 43% gain to $45 an ounce. Now I'll be wearing this Make Silver Great Again hat up from now until the election, because I am a big bull and believer on the silver market, and then you kind of know where I stand politically. Now, one thing to note politically, and I don't like to get into politics too much at all, especially not on any channel, Trump's tariffs, that's what kind of moved the markets around yesterday. We have to look back at when Trump was elected and he instituted tariffs, how it impacted specifically the dollar index, because the dollar index, remember the inverse correlation with the gold market, it rallied about 5%. At least that's what I heard somebody rattle off on TV. And how does that impact the gold market? So we do need to have some caution as well. And I don't think that a lot of people are talking that Trump was telling the Fed what to do. Remember, they're supposed to be apolitical. This interest rate cut decision that came in prior to the election happens every 4 years. There's a meeting, so it just depends where we're at on the cycle is where they're going to cut and how much they're going to cut. They cut 50 basis points because they screwed up. They should have cut 25 in June or whenever they met before that, July. They really should have. And then they would only cut 25 basis points. There wouldn't be this manipulation type of stance that's out there. So you guys got any questions? I got to cut it a little bit early working today. I got to go and I need to get a physical done. So what's up with that? Getting old over here. And then if you don't get the Metals Edge, look out for that. And I'll be on the Schwab Network at 7:15. So that'll be on your local news. If you scroll over on a Samsung TV or whatever you got, the Insignia one, it's there. And I'm going to outline some of these things as well. So got any questions? Give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.